Hello and welcome to another update video about FETCH.AI, and the FET chart has started a pullback, and maybe this is now wave 2. I have to say I don't like the look of the structure here to the upside. It doesn't mean it's bearish, but I want to highlight that I don't really like that perspective here to the upside, and it's just, you know, due to these shallow pullbacks everywhere, we don't really have a very clearly defined micro count. I mean, I give you my perspective. At best I can do is to highlight that this here was likely a wave 1 in a leading diagonal, a wave 2 pullback, a wave 3 rally, a wave 4 pullback, and the wave 5 might have finished here on the 23rd today, and then we've seen that pullback, which actually was quite aggressive, looks quite impulsive, and broke the trend line here that we discussed in the last video to the downside. So in the last video, we already talked about the idea that maybe this move up, it might get another squiggle higher, which it did, but could also be finished. So basically very much in a topping situation there, and that we just have to be watching for a break of the trend line for an early indication that a wave 2 pullback has started. It's only the earliest indication that we can get, you know, an impulsive looking break of the trend line, and maybe even more important, a break below the last swing low, which also happened. So the idea is now that, okay, circle wave 1 might have topped, which is the first wave of a larger cycle, of a larger, what is it? Larger third wave, isn't it? So let's go to the 4-hour chart, give you an idea of the context. So the idea here on this chart is that we had in November 22 already the start of a wave 1 and then a wave 2 pullback. So we had two trend reversal areas at the time that provided great entries. And then the third wave is likely unfolding now. And what I just tracked with you is the first wave 1 of the larger degree third wave. Actually not even, I think it is even another wave degree. So yeah, we had another, okay. So 1, 2, and then this here is another wave 1 and another wave 2, where the low was made in February. So we have a 1, 2, 1, 2 setup. And now this could be, go to the 1-hour chart again. After a wave 2 bottomed here around the 5th of February, this could be another 1, 2 setup, just a smaller wave degree. And that means the next move to the upside should be a third wave of a third wave, a very aggressive third wave rally, typically one of the strongest movements in a trend. But there's obviously a condition. There's a condition. The condition is that the 61.4 cent level is holding, because this is the 78.6 retracement of the most recent uptrend here that started early in February. So we have that wave 1 to the upside, where the price surged really from around about 51 cents all the way up to around about $1.19. So we've had that, and that movement, you know, if it's really complete, then it needs to be corrected, and the support region here points towards the region 87.8 to 61.4 cents. If we find support in the yellow zone, then a third wave should take the price really way higher, yeah, possibly even $2 plus. So that's sort of what I'm watching at the moment here on the FET chart, but just a red candle and the break of a trend line does not really confirm that this really is the wave 2. What is needed now in addition to that? Well, what we need is, so let me just shift it into place. Then the need is that the next rally, which should be part of this correction still, is going to be corrective. So the B wave ideally stays below the 23rd of February high. And if we get that as a corrective B wave, and they are not always clear, but sometimes they are clear. And if it's clear and we don't get a break above the recent high, then we could see a C wave, breakdown. We could see that. Now, please also understand that a C wave also is a 5-wave move in itself, but we're really on such a small time frame and wave degree that it doesn't really make sense to follow it really with micro counting. But the benefit would be that obviously this C wave to the downside would also be a 5-wave move, and typically the initial 1-2 setup could provide a nice setup to short the 3rd wave of the C wave, and we could still get a 4 and a 5. The advantage of waiting for the 1-2 setup with shorting compared to the B wave is that a B wave can also overshoot. That means a B wave can even go above, even if just briefly, could even go above the recent high of the recent wave 1. So yeah, but essentially we need to see the next rally as a correction. And then if we see a first 5-wave move down from there, that could be the trigger that wave C has started, the confirmation, the indication. Wave C of 2 could have started then, yeah. And the support areas were mentioned. Obviously, this perspective has to be revised if the price now, I mean, in a decisive break, you know, takes out the $1.23 level to the upside. Yes, it could be an overshooting B wave. Therefore, I say, you know, it depends on the structure a bit, and we need to see a sustained break. So overall bullish structure, but that wave 2 pullback might have started now. So it could be an opportunity, maybe something for the watch list if the price offers here this pullback, which could, as I said, take us down to around about 87.8 cents next. Well, then it might be worth looking at this, or you know, seeing this as a potential opportunity. That's my update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.